Good morning. It is Thursday, June 21st. Taking a look at the morning charts, we've got the US dollar index. You can see here we've got a pretty bullish pattern still holding up in the US dollar index. This is a 4-hour chart, zooming back a couple months, and you can see we've got a nice large bull flag with a nice strong run up, and now we've just been consolidating here, pulling back. We're more or less flirting with the 38 and 50% retracement levels on the Fibonacci. And if we do see the dollar start to rally out of here, we're probably going to see it at least come up to these highs, if not probably put in a much higher high, and that would actually turn equities sharply lower. Now, looking at this morning's price action for the dollar index, if we just zoom in a little bit here, you can see in the last 4 hours we've seen the US dollar start to come down. We did have a little bit of a bounce yesterday, came right back up more or less into resistance, which are a previous spike high we had, and we're kind of through this congestion here, and more or less just connecting these tops. You can see that we are continuing to see resistance form on the US dollar. So we've hit resistance this morning, and the dollar is starting to head back down. Now this purple line across the bottom, this is a 50% retracement from the large bull flag, so it's acting as pretty good support. You can see every time it comes down near that level, we get a bounce, came back down, another little bounce, back down, and we've got another bounce. So this is a pretty key support level. More or less, you could look at this pattern as kind of falling into this little wedge here, and it's getting into the apex. Eventually it's going to have a break either to the upside or to the downside. If we do get a break to the upside, then this level here is going to be a pretty critical one, where we form more or less a double bottom and our W formation, and a breakout there could trigger a pretty big rally in the dollar, which would trigger continued selling in stocks and commodities. Now yesterday's rally in the US dollar index put some pressure on commodities, so let's just take a look at how things unfolded yesterday and what's unfolding this morning. Here is the crude oil chart. This is the weekly chart, just showing you major support zone in between these red lines, and also the previous major pivot low, which is this blue box zone. Yesterday we had a pretty big down day in crude oil. It's trading right at the lower end of its range. It still has a blue box for support down here, but overall this chart pattern here is looking pretty bearish. Let's just take a look at the 4-hour chart. You can see we've been chopping around in this support, these red lines here, this support level, and yesterday we saw a continued bleeding to the downside. This was a strong move down, and you can see how each candle here started to become smaller and smaller, and more or less wasn't on huge volume. Usually when you see this type of price action where price falls and then you see it start to diminish in candle size, you'll get some type of reversal and bounce back up. Just to compare that, it works in both situations. You can see here, this is the flip situation where prices picked up speed to the downside, but overall you can see what happens before that pattern. You get a big move up, and then you see it slowly pick up speed. And fear and greed work more or less in the same way, they're just flipped. So this one here, fear, more or less we had some good buying, and then fear slowly crept in and it put a bottom in. Here we're actually seeing fear diminish as fewer and fewer sellers are selling, and now we're seeing buyers step back in. I wouldn't be surprised if we see a bounce back up to the 83 level, which will be right through the more or less the middle of this noise, and it'll get stuck under resistance. But overall, crude oil looks as though it might come up, kiss this level, and it could end up falling sharply and continue down to the $77, $78 per barrel level. Looking at natural gas is starting to look as though it's got a little bit of a topping pattern. I talked about this yesterday. What we wanted to see was 3 surges to a high. We had 1, 2, we had a sharp pullback yesterday, and then we had a nice push just to a new high. There's 3 surges, then we saw big sellers step right back in. Looks as though it's forming a little bit of a bear fat pattern here. Of course, we've got a little bit of a support level, kind of like a sloppy head and shoulders. The right shoulder is actually higher. I call it 3 surges too high. I don't really even know if there's a real pattern for it, but I see this happen over and over and over again on stocks and commodities, and usually you see a sharp break back to the downside, taking away half of the previous move. So we probably see a drop down to this level here. Overall, it didn't quite reach as high as I wanted it to go. It did get right up halfway through this midpoint. I was hoping it would push a little bit higher. I wanted more of a definitive push to new high. Instead, it just pierced it, and then sellers jumped right back on the bandwagon, forcing natural gas down. Overall, it looks as though it's forming a bearish pattern here. I do feel as though it's going to head lower. Not sure I want to quite short it right at this time. I'm going to keep my eye on it. Also on the US dollar index. Natural gas doesn't really have too much effect with what's going on with the US dollar. But overall it still does help a rising dollar. If we see it forming a base and breaking out, natural gas should also pull back simply because of the rising dollar. Looking at precious metals, here is the gold 4-hour chart of gold, and we saw this unfold. We saw a grind up into resistance more or less. Once we got to that level, the Fed announcement came out. We've seen gold just continue to pull back, has yet to break out of any bullish patterns here. Looking at gold miners, similar pattern, came up, kind of tested these previous highs, sold back down. And silver has done the same thing. It didn't actually rise up as much, simply because it kind of underperforms in this type of situation. Instead, it kind of just traded sideways, whereas gold went up and tested its previous highs. Silver just didn't have as much interest, and silver really took a beating the last couple days, sliding quite a bit lower. Overall, I still think they're in no man's land, and I'm not really that bullish on them yet. I feel as though we could see them chop around even for a couple more months, as posted in last night's little report that I sent out on precious metals. And then I think we could see something pretty big happen in precious metals, but really we need to see how things really unfold in Greece, Spain, Italy, and depending on how things unfold in the price action in stocks, the dollar, and precious metals, as we get through those stages, will kind of give us an outlook as to which way things are going to move for gold and silver. Now looking at bonds, this is kind of an interesting chart. We saw bonds actually pull back, make a new low yesterday. Hold on, let me just pull up the proper chart here. Bonds pulled back yesterday, and they're having a little bit of a pop back up. More or less, they broke this short-term support level, and this morning, usually once you pierce support, it kind of runs some stops. You can see volume was actually elevated yesterday. Once it breaks these pivot lows, there's going to be a lot of people getting stopped out, and that's why you get a volume spike. Once it runs those stops, you'll see it bounce right back up into resistance. Now, if we just take a quick look at this level, you've kind of got your range high and low. If you were to just draw a line right through the middle of that, averaging out the price range through there, you can see we're somewhere right about here. So we've seen bonds fall down, shake the stops out, and now it's bounced more or less right back into the middle of this range. That's going to act as resistance, and we'll see which way it goes. I don't really have a clear signal on bonds. Obviously, it's still in a very strong uptrend, but this pattern here to me isn't giving us any high probability plays. The fact that we did see bonds fall yesterday and the vibe in the market, I do feel as though individual investors have seen bonds trade sideways here for a couple weeks and do nothing, while equities have put in a pretty strong rally. I feel as though we're seeing traders and investors slowly roll out of bonds because they're falling behind on the equities market, and I think when the general masses are pulling out of bonds and going into stocks, which stocks in my opinion are a little bit overbought at this level still, usually that's a short-term top in the equities market. So I got a feeling that all these people rolling out of bonds to catch up and get into the equities, which have been pretty strong the last few weeks, are actually going to move into equities and then see the equities market drop, and they're going to wish they stayed in bonds, because bonds will probably continue higher, while their equity positions they just took buying more or less at this short-term top are going to fall in value pretty quick. So it's kind of what I'm seeing and feeling unfolding in the near future for kind of equities and bonds. Taking a look at the daily chart of the SP 500, or I say the SP 500, which it is, but overall the broad market, the equities market in general, they pretty much all follow in suit here, give or take different percent moves each day, but the patterns are generally the same. You can see here we've had a nice strong run up into the Fed announcement. We've traded more or less sideways. It is consolidating this morning. You can see this is this morning's futures candle, and really we're just trading sideways, consolidating. It's actually a little bit of a bullish pattern, and yesterday we had a good little dip in the market. It doesn't look like much on the daily chart, but we did have the Fed announcement. We had a pretty strong dip to the 5-day moving average. There is strong institutional support usually around the 5-day moving average, and it ended up getting bought right back up. And you can see here we are trading pretty much sideways in this consolidation. It looks as though it still wants to head a little bit higher, but we'll see how things play out, and we'll be looking to, depending on the sentiment and how things play out in the next day or so, we could be looking for a quick short-term short play, a pullback, or we'll just be looking for, if the market pulls back sharply on some type of news or something, we'll be looking to likely get long for a much longer play to go to the upside. Looking at the futures chart, so you can see what's happened intraday with the SP 500. Here are the past couple trading sessions. I'm not sure why my software here isn't pulling up the newest contract each morning. Anyways, here's the SP 500, and you can see zooming in to more recent price action. Here is yesterday's trading hours. This is the volume surge here. This is 9:30 to 4. So that's yesterday's price action. This is when the Fed announcement came. We saw a very strong sell-off followed by a strong rally. Another sell-off, another rally. Very choppy sideways market. Perfect for shaking traders and out of positions, and why you don't really want to trade around news. Overall, looking at this, you can see we dropped all the way down to around 1339, went all the way up to 1355-ish. Big trading range. Overall, that's some pretty major chop. But you can see here yesterday and overnight trading last night and this morning, we saw equities pull back down, and now they're starting to move back up. But overall, they're still trading within yesterday's range. We're not going to see anything too significant happen. And zooming out a little bit more here, you can see we're having a little bit of a pause. We've had a nice run to the upside, starting to get a little bit more of a pause, and you can see here within this run we're having multiple pauses. You get a rally, little pause, rally, pause, rally, pause, and this could continue to work its way higher with another rally, which it looks as though there's some pretty good buying going on this morning as the US dollar is pulling back. So we're keeping our eyes peeled for a play here. We are pretty high above the 20-day moving average. We're about 3% above it. Usually if the market is about 3% or more above the 20-day moving average, I don't really want to get involved, because you can get a very sharp correction and a pullback to the 14 or 20-day moving average and give you a better opportunity to get in. Right now the market has just been stair-stepping its way up. It has got a lot of pivot lows here to shake stops out and really cleanse the market. And usually when you see a strong sell-off that runs these stops, that's when you can get a better entry point to get in as the market continues higher. But really it's just been stair-stepping its way up, not really shaking the market out. It's just been people piling in, front running the Fed's news and stacking up risk more or less. So that's kind of where we stand this morning. Taking a quick look at market sentiment. Let's just pull up these charts real quick. Yesterday, if we just look at the NYSE volume, pretty much even from advancing to declining shares. There wasn't really any real bias. We did see new highs continue to hold up a little bit, but really for a strong bull market we want to see this up, both of these over 100 if not 200. So these are kind of neutral numbers yesterday. Market was pretty much in limbo. Looking at the market momentum, we need again a price surge over 101 to be overbought, which we can expect some weakness in the next trading session, or we need an oversold market below 99 for us to see possible bounce. Yesterday it closed pretty much right in the middle of this range, around 90, around 100. So nothing signaling there. Another neutral session today so far. And also looking at the 20-day moving average, stocks trading above the 20-day moving average. We have ran right back up into an overbought territory, which is 75 or higher. This is usually a level when we see the market try to top out. Now it can grind up here for quite some time, and it really depends on a few different factors. Usually when you get into this overbought territory and you see the market momentum chart, which was the chart I just showed you a little bit higher, when you see it over 101, you can usually expect some volatility and some sharp pullbacks for the next morning for very short-term intraday plays. But overall, this is we're getting into an intermediate topping pattern where we might see the market pull back for several sessions before continuing to go higher, or at least trade sideways and slightly lower for a few sessions. And we're going to keep our eyes peeled for any setups there. One other chart to look at is the stocks trading above their 50-day moving average. And just looking at this chart here, you can see overall it's been trending down. We're seeing more or less, even though the stocks have had a pretty strong rally, fewer and fewer stocks are trading above their 50-day moving average. You can see here we're pretty much at the 50 period now, meaning only half the stocks in the equities market are trading over their 50-day moving average, which is a pretty major moving average for long-term trends. So the fact that we're up at this level, that's a lot of stocks, half the stocks more or less bumping their heads on the 50-day moving average, and we could see another move down in the equities market going through the summer if we see the US dollar take off and more uncertainty kind of unfold in Europe. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.